Good morning and welcome back to Almus Market Mornings. Market participants, who are basically you, me, and a few computers, react to few words by some powerful people indicating strong intent. Whether it is a central bank chief using speech to guide market expectations or government officials indicating future policy, a reaction is enough to move markets as you, me, and a few computers prize in the newly created reality. Yesterday, we saw a great whipsaw move in the market after a White House official said the president is seeking Chair Powell's removal. Dollar fell sharply, precious metals rallied, and equities posted some losses, only for these to be quickly reversed as President Trump said he was not planning to do anything. Let's understand what's happening. Good morning, JK. What is your read on yesterday's set of market moves?
Good morning, Swaraj. Yes, I think huge volatility was on the basis of Powell news. But actually, it was a classic pump and dump media headline creation and nothing really substantial. Initially, the media reported that, Trump asked Republican lawmakers if he should fire Powell, and several people indicated that he will do it. But it's more like a bark than a bite because Trump asking them make it sound as if Congress can fire Powell, but it cannot without a cause. And, there is no constitutional provision for, sacking a Fed chairman. Unless there is some, strong illegality that has been established. Eventually, even if they do, and they replace with someone else like Hassett or Besant, FOMC could still vote for someone else to be a chairperson, not the one who is nominated by the president, someone like Williams, and they can continue to do what Powell has been doing. I mean, in the sense, wait and watch and a cautious approach on the policy. So it was like, I think informed people know that this is not having any basis, or rather, it is not going to be happening in reality, and therefore, markets quickly turned when Trump himself denied that he was planning to do it. So it was a creation of a drama and nothing in reality. So the dollar, which had fallen more than 1% from its highs, reversed at least more than half of the losses. And so, I think, like the tariff headlines, even this news is starting to lose its headline value. And I think any further headlines based on this, I think will receive only much less attention. Just looking at some of the economic numbers yesterday, I would say, at least going by yesterday's number, it was kind of Goldilocks, scenario in the US because the PPI was much lower than expected, and also lower than the previous month, also in both headline and the core number. Although the previous month's number was revised upwards. Secondly, the services side inflation was still, was coming off, whereas goods prices were going up. So there was some sort of a setup that was happening. But overall, the numbers were not reflecting a great pass through of tariff related price pressures into the index, and that was giving quite comfort. In fact, after that number, actually the yields came off and there was buying in treasuries, and dollar also did not stopped rising. Actually, after that, of course, it got a reversal, a much bigger reversal after the Powell news. And then we had the numbers on the industrial production or the manufacturing data also, that showed, it edged up in June, and it was driven mainly by motor vehicle output, and manufacturing had been remained constrained due to tariffs on imports, but it ticked up 0.1% last month after an upwardly revised 0.3% in May. So overall, some revival that is being seen in the manufacturing as well. That's why I said there's some sort of a Goldilocks, mini Goldilocks scenario, I would say, not overall economy. But yes, yesterday's data at least indicated manufacturing is improving, and then the inflation is falling. So it doesn't change any outlook on the monetary policy because this may just be the starting of the tariff-related price pressures being reflected in the index. We had seen similarly in CPI day before yesterday that though the numbers were lower than expected in the core, overall, it was higher than the previous month. So we should wait for more data, and that's what Fed will do also. Now, actually, if you look at the market expectation on rates, September is now down to only 56% probability. Earlier, it had gone up to even 90%. So, I think more and more rate cuts is once again turning to be a 1 cut this year. Yes, of course, we'll have more data. We have important data on retail sales today to indicate how the consumption is moving, and of course more indication on the manufacturing as well. Worth looking at some of the other regions, like UK inflation was again much higher than expected, higher than last month. This follows a downbeat number on GDP growth, and of course the unemployment data, which is expected today. Unemployment has been on the downside in UK economy. The UK economy is actually, like I showed yesterday, it is more like a stagflation scenario there, unlike what we are seeing in US. Um, it's there is degrowth, there is high inflation. So there's a policy dilemma for the BOE MPC also. So that's not good for sterling. Sterling has been a little bit under pressure of late, but overall the dollar direction itself has been net net. It's a slow mover coming up from the lows of 96, and then now hovering around 98. I think um, if you look at overall scenario of the US economy, the tariff has been one of the main issue, and now the consensus seems to be that tariffs will settle between somewhere between 15 to 19%. And this is actually, if it does settle for most countries, then it actually means that Trump is winning the tariff war, at least to some extent, make up for the deficit, of course, which has also gone up due to tax cuts, but will not be seen as negative as it used to be earlier. And then we also have evidence to see that the foreign governments and major sovereign wealth funds have not withdrawn so much away from the US assets, and treasuries continue to receive inflows from foreign investors. So overall, the big story of dollar continuing to fall may not hold water, at least for some time, until we get some stronger indications or a stronger growth picture from other regions. So other regions have their own problems as of now. Although Europe is stabilizing, there's a long way to go to attract big long-term flows. So dollar seems primed for some more correction, is what I expect, and that's actually keeping the market on the sidelines for now. There is a huge amount of short position out there, which I don't know, at some level it can see some covering also. On the rupee, the story is very simple and familiar. Well offered above 86, and well bid around 85.60 to 85.70. On the both sides, we have understanding that central banks may be operating through the banks. Although there was some large inflow yesterday, led by QAP related flows. But that was well absorbed at the lows, and we again bounced back to the higher end of the range. I think this is likely to continue, with the market now watching for a few things like a trade deal with the US, where President himself is indicating that there is going to be a good trade deal with India, and hopes are rising after a similar deal with Indonesia. Earning season is another factor that's cornering attention from the investors, because we have had some downbeat earnings so far, particularly from the IT sector. The bond market, where yields have been rising to record levels, particularly in Japan and USA. If they continue to rise, it could have some implications. Monetary policy indications from US, which is now not very conducive for the doves. And finally, the there was also a threat from NATO. Of course, not many people consider as a real threat, but NATO is also saying that there could be some sanctions on India, Brazil, and China if they continue to import from Russia. So there are quite a few things that the investors are considering, and nothing real clear evidence of a direction emerging. We will continue to this range between 85.60 and 86, at least till August 1st deadline, when we expect the dust to settle on the trade issues. This range should hold for the market. Thank you.
Thank you, Jake. And it seemed it was a classic headline-driven whipsaws yesterday, and all of that, as of now, has subsided. And let's focus back on the economic numbers. It seems like a good scenario for the US. Inflation printing lower than expected when it comes to the PPI. It was lower than the previous month's print. But one important thing to note is that the previous month's number was revised higher, so that's something to keep in mind. Overall, services prices are going down and goods prices are going up, so the number remained largely subsided. Industrial production edged higher. When it comes to the market expectation on rates, though, September is down to a 56% probability of a rate cut, which at its peak was, I think, over and above 90%. Today, of course, markets will focus on the retail sales data from the US. For the rupee, USD/INR was in a range 85.60 and 86. That was the range being followed. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh round of updates from the markets.